Hi candidates, welcome to another session of JK Accountancy Tutorials. So in this session, I want us to continue with the topic of impairment of assets. And specifically in this session, I want us to look on how to determine the impairment of a cash generating unit or a CGU. So when talk about a CGU or a cash generating unit, this refers to a group of assets which generate cash flow as a group, which is largely independent from the cash flow generated from other assets, or basically the other group of assets. So therefore, as a CGU is a particular group of assets which generate cash flow as a group. It basically means that if you pick one of the assets from that group of assets, it can't be able to generate cash flow on its own. And therefore, when determining the impairment loss of a CGU, we determine the impairment loss of the entire group of assets and not an individual asset within that particular group, simply because when determining the impairment of an asset, if you can remember what we did in our previous session, is that you must be having cash flows generated by that particular asset. But even before we look on how to determine the impairment loss of the CGU, first of all, you can say that a cash generating unit, that is a CGU, is a group of assets, or the smallest is a smallest group of assets which generate cash flows as a group which is largely independent from cash flows generated by other assets, all group of assets. So that is the definition of a cash generating unit. Is a group of assets which generate cash flow as a group, which is largely independent from the cash flows generated by other assets, or a group of assets. Now in this case, therefore, what I've said is that if you pick one of the assets within that particular group, it can't be able to generate cash flow on its own. And therefore, in this case, when determining the impairment loss, we determine the impairment loss of that particular group of assets and not the individual asset. It's also important to know here that when determining the impairment loss of a cash generating unit, this is actually determined in the same way, just like how we determine the cash flow, that is the impairment loss of an individual asset, asset. So therefore, maybe first of all, we can say that a cash generating unit is said to be impaired when the recoverable amount, abbreviated by capital RA, when the recoverable amount is less than carrying amount. So, and therefore, if that is the case, the recoverable amount is less than the carrying amount, then an entity is required by International Accounting Standard number 36 to proceed and determine the impairment loss, being the difference between the carrying amount, which is also known as the net book value, and the recoverable amount. You also have to recall that when talk about the recoverable amount of an asset, abbreviated as RA, what we covered in the previous session, this is taken to be the higher of two values, higher of something called the net realizable value, which is also known as the fair value less cost to sell, or number two, something called the value in use. So, and in this case, the value in use of a cash generating unit is basically the present value of the estimated cash flows to be generated from the continued use of the asset and also from its disposal. So therefore, you can see that in terms of how we determine the impairment loss of a cash generating unit. Basically, this is determined in the same way, just like how we determine the impairment loss of an individual asset. Also, in this case, what you have said is that it is not possible to determine the impairment loss of an individual asset within a cash generating unit, and therefore what we do is that we determine the impairment loss of the entire group of assets, and then the determined impairment loss, or the impairment loss which has been computed, it is then allocated to the asset within that particular group of assets. And therefore, in this case, we can say that it is not possible to determine impairment loss of individual assets within a CGU, within a cash generating unit, since individual assets do not generate cash flows. Since individual assets do not generate cash flows, generate cash flows on their own, because in this case we are saying that this particular asset within this particular group, they generate cash flow as a group, meaning that if you pick an individual asset, then it can't be able to generate cash flow on its own. A good example of a cash generating unit is something like a factory. So basically what we know is that a factory comprises of a number of assets. Like we have the factory premises, or maybe the factory building. We have the machines which are installed within the factory. We also have some computers for record keeping and so on. We also have things like the patent, the innovations used in the factory in terms of producing various products. So therefore, you can see that a factory is a good example of a cash generating unit, because it comprises of a number of assets and which generate cash flow as a group, meaning that if you pick one of the assets there, or from that group, it can't be able to generate cash flow on its own. And that's why we are saying equally here, it is not possible to determine the impairment loss of individual asset, because for you to determine the impairment of loss of an asset, you need to have something called the cash flows. Cash flows are used in determining the value in use. And therefore here, what we do is that we determine the impairment loss of the group of asset, or the impairment loss of the cash generating unit, and then we allocate that impairment loss to the asset within that particular cash generating unit. So therefore, in this case, we can say that impairment loss of the CGU, the cash generating unit, is determined and then allocated to asset within the CGU, and then allocated to the asset within the CGU in the following order. So the order of the following order is followed, or this is the order which we use or we follow to allocate now the impairment loss to the asset within the CGU. Number one, impairment loss will be allocated to assets which are obviously impaired. So in this case, when we talk about assets which are obviously impaired, these are those particular assets which are either damaged, or basically those particular assets which are destroyed, meaning that these assets have a net realizable value which is equal to 0. So it basically means that if the company decides to sell that group of assets, then those particular assets will not fetch any amount of money. So first of all, allocate impairment loss to those particular assets which are obviously impaired. Number two, we then allocate impairment loss to goodwill in that particular cash generating unit. If there is a goodwill in that CGU, next allocated to the goodwill. And finally, we also allocated to other assets, based on the a net book value, or based on their carrying amount. We then allocate to the other assets based on their net book value or the carrying amount. So therefore, it is important to note that once we have determined now the impairment loss of the cash generating unit, then it has to be allocated to the assets within that particular cash generating unit. And actually, that is the order which is followed in allocating that particular impairment loss. So and then from there, we can proceed and look on an illustration. We illustrate how to determine the impairment loss of a cash generating unit, and also how we allocate the same. And I want us to look on a past paper question which was tested in the August of 2022, specifically question number 2A. Question 2A. So August of 2022. August of 2022, question 2A. And the question is, B Limited operate a factory as its sole cash generating unit. During the year which ended 30th of April 2022, there was an explosion in the factory which necessitated an impairment review. The carrying amount of the factory asset were as follows. So we have goodwill, which had a carrying amount of 2 million, patent 3.6 million, machinery 4 million, computer equipment 8 million, premises 30 million, and the total carrying amount of that cash generating unit is 47.6 million. And then you're given some additional information about, you're told an impairment review revealed a net selling price of 19.2 million, while that is, and the value in use of 31.2 million for the factory. And number two, you're told half of the machinery have been destroyed and have no resale value. Number three, the patents have been superseded by a new superseded and are now considered worthless. Number four, the company follow the cost model as permitted by International Accounting Standard number 16, property, plant, and equipment. So what you're required to do is we discuss with suitable calculations how the impairment loss in the cash generating unit would be accounted for in accordance with the International Accounting Standard number 36. So basically, what you're given here is information about the factory, which you're told is a cash generating unit of this company called B Limited. And therefore, what you have said is that we determine the cash, that is the impairment loss of a cash generating unit of a CGU, and then from there we proceed and allocate it to the asset within the CGU. So therefore, that is what you need to remember, that we determine the impairment loss and then allocate it to the asset within the CGU. So the first thing, therefore, we need to do here is to determine the impairment loss, and this impairment loss is determined, or we are computing this impairment loss on that year of April 2022. So the first thing we need to recall here is the formula. How do we compute the impairment loss? So in this case, we take the carrying amount, which is also known as the net book value of the CGU minus the recoverable amount. So in our case, we already have this particular value here. We are given the carrying amount of the cash generating unit. And in this case, remember, we are not taking the carrying amount of individual asset, but the carrying amount of the CGU, which is given under paragraph 2 as a figure of 46, that is 47.6 million. So that amount is already given. So next, what we need to do is to determine the recoverable amount. So the recoverable amount in this case, we have to recall that this is the higher of two values. Number one, it is the higher of the value in use. And in our case, the value in use, we have to recall that this is always the present value of the cash flows to be generated by this particular cash generating unit. But if you check on the information provided here, specifically in addition information number one, we are told the value in use is 31.2 million. So that value is already given. So therefore, we already have that value. So we take the higher of that, or number 2, the net realizable value, also known as the fair value less cost to sell. And actually, this one in our previous session, we said it is the estimated selling price of a cash generating unit, or maybe estimated selling price of an asset, less the cost which will be incurred in selling that asset. Equally, in our case, this figure is already provided. In addition, information about whereby we are given the net selling price. The net selling price is just the same with the net realizable value, because it is a cost, or the estimated selling price minus the cost which will be incurred in selling such a cash generating unit. So out of the two values, we take the value which is higher, and the figure which is higher is that 1.2. So therefore, in this case, we can say that the recoverable amount of this cash generating unit is 31.2 million. So we already have the recoverable amount. Having the recoverable amount and also the carrying amount, we need to determine whether this cash generating unit is impaired or not. And actually, in this case, we say that an asset is said to be impaired if the recoverable amount is less than the carrying amount. So we need to check this particular amount here, the recoverable amount, is it less than this one? Yes, it is obvious that this one is less than the carrying amount. Basically, what that means is that this cash generating unit is therefore impaired. And if it is impaired, the next thing we need to do is to determine the impairment loss. So therefore, let's determine the impairment loss. Loss. So we apply our formula here. We take the carrying amount, which is 47,600,000, minus the recoverable amount, which we have down here, 31.2 million. 31.2 million. So this will give us now the amount of what? The amount of impairment loss. So therefore, the impairment loss here will be equal to 47,600 minus 47,600 minus 31,200, and that will give us impairment loss of 16.4 million. So therefore, that is the impairment loss associated with this particular cash generating unit. Now, having determined that impairment loss, next we need to do what? To allocate this particular impairment loss to the asset within the cash generating unit. So we need to do allocation of the impairment loss. We allocate the impairment loss to the asset within the cash generating unit. So how do we allocate this particular impairment loss? You have to recall the order. First of all, we allocate to the asset obviously impaired. Number 2 to goodwill. Number 3 to other assets within the CGU. So therefore, the first thing, or basically first of all, we allocate to those assets which are obviously impaired. And actually, I've said that these are those particular assets which are either damaged or destroyed, meaning that they are worthless. If the company decides to sell this cash generating unit, those particular assets will not fetch any amount of money. Now, if we go back to the information which you are provided with here, specifically note number 2, we are told half of the machinery have been destroyed and have no resale value. Half of the machinery are destroyed and have no resale value. So meaning that half of the machinery are obviously impaired. So therefore, we can take machinery and not the full, or basically not all machinery, but half of them. So basically, if we go back to the information we have under paragraph 2, the machinery have a value of 4 million, a carrying amount of 4 million. So what is half of that? Half of that is 2 million. Half of that is 2 million. Is 2 million. 2 million. Remember, this is the carrying amount. So here we need to have a column here for the impairment loss to be allocated. So the impairment loss to be allocated to this particular machinery must be equal to their carrying amount, such that once we allocate now an impairment loss equal to the carrying amount, then we reduce the value of those machinery to 0 because they are worthless. So therefore, we allocate impairment loss of 2 million. So mean that out of our total impairment loss here of 16.4, 16.4 million, 4 million. So we have allocated impairment loss of 2 million to machinery. So mean that we have a balance of or the remaining impairment loss is around 14.4. So still, if you go back to the information we are given in note number 3, we are told that the patent have been superseded, they have been replaced by the new patent, and therefore they are considered worthless. So equally, the other asset which is obviously impaired and which has no resale value is patent. And actually, the carrying amount of patent under paragraph 2 is 3.6. 3.6. So what we need to do is to allocate an impairment loss equal to the carrying amount such that we reduce the value of those patent to 0. And therefore, equally here, we have allocated impairment loss of 3.6 to patent. So we still have some impairment loss which is remaining because out of 16.4, we have only allocated 5.6. So this, as per the information which you are provided with, these are the assets which are obviously impaired. The half of the machine and basically the patent. Number 2, we then proceed and allocate impairment loss to goodwill. We allocate impairment loss to goodwill. So what is the carrying amount of goodwill? The carrying amount of goodwill is 2 million. So therefore, we are going to allocate impairment loss. We are going to allocate impairment loss equal to that carrying amount, such that we reduce the value of goodwill to what? To 0. So equally from this, we have allocated 2 million to goodwill. You can see we have not exhausted that particular amount of impairment loss. So we have allocated a total of around 7.6. So we still have impairment loss which is remaining. Finally, we allocate the remaining impairment loss to other assets, in that cash generating unit. So you can see our cash generating unit has 5 assets. Goodwill, we have already allocated impairment loss of 2 million to goodwill. So that will not be considered to be part of the other asset. The same case with patent, we have allocated impairment loss of 3.6. So therefore, here, the other asset include now the other machines, the other machine or the other machinery. So when talk about other machinery, remember we dealt with half of the machinery here. So other machinery, we are talking of the balance of the other machinery. So because the machinery had a value, a carrying amount of 4 million, and here we dealt with machinery having a value of 2 million, the other machinery have a carrying amount of what? 2 million. So we need to have this carrying amount or the net book value. So below that, we also have a computer equipment having a carrying amount of 8 million. And finally, we also have premises. We have not allocated any impairment loss to this particular asset. And the carrying amount for premises is 30 million. So what we need to do here is basically to get the total carrying amount or the total net book value for these 3 assets, which will be 40 million. That is 10 plus 30, which will give us what? 40. So what basically that means is that the remaining impairment loss will have to be allocated to these other assets on a pro rata basis. On a pro rata basis means that the remaining impairment loss will be allocated to these 3 assets based on their carrying amount or based on their net book value. So therefore, let's do that. We allocate now the remaining impairment loss to the other assets. So we start by determining the amount to be allocated to other machinery. And this will be equal to its carrying amount here, which is 2 million, all over the total carrying amount of the 3 assets, 40 million. And then we multiply that with the remaining amount of impairment loss. So remember, our total impairment loss was 16.4. And out of that impairment loss of 16.4, we have already allocated impairment loss of 2 million to this machinery, 3.6 million to patent, and 2 million to goodwill. So meaning that the remaining impairment loss is a figure of 8.8. So this 8.8 is the one which is to be allocated to these 3 assets based on their carrying amount. So That is the amount to be allocated to other machine. What about computer equipment? Computer equipment. So we take the carrying amount 8 million, all over total carrying amount 40 million times 8.8. So then finally we have premises, which is equal to 30 million, all over the total carrying amount 40 million times 8.8 times 8.8. So this will give us the amount of impairment loss to be allocated to those assets. So we take 2 here, all over 40 times 8.8 million, which will give us for 40,000. For 40,000. What about computer equipment? We take 8 million, all over 40 times 8.8, which will give us 1,760,000. And then for premises, we have 30 million, all over 40 times 8.8, which will give us 6.6 million. So therefore, that's basically how we allocate that particular impairment loss for impairment loss to the asset within a cash generating unit. So therefore, that is it. That what is required as far as that particular question is concerned. And basically that brings us to the end of our session. So see you in the next session.